Hi everybody, today's video is gonna be different. I'm gonna talk about how to start investing smartly so you don't stress yourself out, you get some emotional control, and yeah, if you're interested, just stick around, and if not, then just click away. First things first, I don't care how much money you make or how much profits you have or whatever, or how much you can set aside. These are just basics. You can stick to it. Like I would say these are very solid basics. You can either stick to it and yeah, just say thanks later, because yeah, I told you so before you start investing. First things first is emergency funds. Like when it comes to emergency funds, you need to have your 12-month expenses. I mean, you can have 24-month for 2 years, or yeah, this is up to you. Like the more, the better, of course. But I'm saying this like if this is like a pretty big deal already, I would say, to have for a year that you just can't stay out of work, and just let's say you want to recover or whatever if something happens to you. If your monthly expenses are I'm gonna speak in dollars. If your monthly expenses are $1,000, this means you need to have $12,000, and this should be in a savings account. In a savings account where you can access it in case of emergency. The reason why it should be in a savings account, it's because every year you get like some percentage back on it. Like you get like 1%, 2%, I don't know. Depends where your savings account is, to which bank or whatever. Yeah, this is up to you. So basically, on top of this money, you get like 1-2%. Yeah, that's something. That's like from 1,000. How much is it? Like 2%. Give me a moment. It doesn't really matter, but yeah, I'm just gonna say it anyway. So yeah, 2% of 12,000, it's 240. Yeah, that's something. I would say 240 just to let the money sit there per year. That's something. Yeah. Okay, on to the next one. I hope this is clear. I mean, you can have it for 6 months and it's less, but if you're gonna need you never know what happens. And if you're gonna need 6 months extra without work, then yeah, you're gonna say thank you when you actually have for 12 months instead of 6 months. But yeah, well, I wanted to add anything else to this. No, just keep this in a savings account where you can touch it. There are savings account where you have to decide for how long you leave it there, and yeah, those offer like bigger percentage. But yeah, let's move to the next one, to the next emergency fund. You need to have emergency funds on top of this 12-month expenses. You need to have like emergency fund of yeah. So the next emergency fund, it should be. This is personal, because if you have a car or you have an expensive computer or something that you use on a regular basis, or let's say something in your home breaks down like a fridge, you need to have like some money in cash, because yeah, if you need to replace something urgently, you can't just touch your 12-month expenses. Savings, you need to have some money set aside. I don't know, this could be like 5,000 to 10,000. Depends how expensive your stuff is. You need a new phone, you need a new car. I don't know, man. You can never know. Yeah, this is personal, but yeah, you have to calculate that, and you have to know this. For me, I just have a phone. I have couple vehicles. But yeah, it's not that expensive for me. Yeah, let's just move to the next one. I hope this is clear. 12 months, and on top of that, something in cash. Let's move to the next one. To the next emergency fund. This is in case, you know, that money is just paper, right? And what is in your bank account or whatever, those are just digital digits. Yeah, it does exist in money or whatever in the bank, but yeah, but that's not the same, man. It's just digital, okay? But the government or whatever, it can decide to just yeah, look, tomorrow it's your money has no value. It happened in the past, and yeah, it can happen anytime. So for this scenario, you need to have gold bars or silver bars stored in the safe place. Now, if you buy gold, then the bars are gonna be like pretty small, and it's a lot of money. Like $10,000 in gold, it fits in your pocket. Okay, like it's just like, I don't know, it's just couple grams. Like 10,000 in a gold bar, it would be like a size of a credit card, just thicker. Like it's pretty small, man. You need to have that and to store it in a safe place. Ideally, you don't want just one bar. You want like multiple smaller ones, just to be able to trade. Because trust me, you're gonna say thank you when the money has no value, and you have gold bars, and you can trade gold bars for goods. You can trade it for I don't know, just like in old age. I'm not saying that it's gonna be like a peaceful time to just get a gold bar outside and trade it, but yeah, you can trade it, trust me, for some goods, I don't know, meat or whatever. I hope this is clear. How much do you need in gold bars and whatever? Yeah, this is also personal. I would say at least in value of 10,000, like $10,000. Yeah, what else? I think this is about it, about emergency funds. Like, you need to have these three so-called achievements set in order to have a peaceful mind that your financial game is strong, that you have safety to fall back to in case you don't like your job or something, or you don't want to accept a job, you want to like wait a little bit more, maybe you want to negotiate a better salary or something. You can just tell your boss, no, I'm not doing this job for that much money. And yeah, you just don't go to work, and you have finances to fall back to. And yeah, you can just do like easier jobs or whatever, I don't know. Like, this is a personal choice. But yeah, I'm just saying. Or in case you get sick, you can touch those 12,000. Yeah, for like a year. I'm not saying your expenses is 12,000. It could be more. I'm trying to make it not too boring. But yeah, you get it. Or in case your car breaks down or you lose your phone or something, you don't have to worry about that. You just replace it, and you're covered also for in case the paper money has no more value. Okay, I hope all this is clear. Now, if you have this covered, then the next thing is the playing money. Like, it's your investing money. It can start from 1,000, like at least 1,000, and it can go up to like infinite. Okay, like in what are you gonna invest? That's totally up to you. Like, if you want to go real estate, you do real estate. If you want to buy custom t-shirts or whatever and sell it more expensive, or any item, let's say you buy something from China and for pennies and you sell it 10 times more, I don't know, man, that's completely up to you. I just told you the basics, how you should start. And you should never take like a loan from the bank. You should always have it in cash. If you want to like take a loan, that is gonna be incredibly stressful, because every month you just gonna have to push yourself like really hard to make sure that you are able to pay that loan. And yeah, that's gonna be stressful, especially if your business fails, like your investments don't really make any return in the first period, or it could fail like totally. Like, you never ever want to risk sovereignty. Sovereignty means that you don't have any money. You live like paycheck to paycheck, and yeah, you don't want that to happen. This emergency funds is not there to impress your partner or impress the ladies, or if you need like a Gucci bag or something to just buy fucking Gucci bags or whatever. This is there for your safety. But probably if you buy Gucci bags, yeah, this video is probably not for you. If your investments go well, then yeah, of course you win. And if they go bad, then you still have a safety net to fall back to. The reason why you should never take a loan, or let's say you use like your investments like a broker or something, you know, like buying Bitcoin through brokers, or using like a trading app and buying, let's say, a Tesla stock, or investing in Forex. I'm not gonna get like to all, but you get the idea. Like, let's say you just use an app to invest the money. The reason why you should not use leverage or loan, it's because if you start winning, then you're fine. Because yeah, nobody really cares. Yeah, from the broker account, if you're winning, you're winning. But if you start losing, let's say the value of the thing that you bought, it goes down, you can get margin called. And if you don't have money to finance that, let's say you open like you only have let's say you only have $1,000, but you open a $10,000 position. Like the moment it drops to a certain point, bam, you're out. If you don't have the money to finance those losses, then you're just simply out. The only time you should use like leverage, then let's say when you have the money in your bank account. Like this happened to me before, that by accident I used more leverage than I wanted to, and the value dropped, and instead of I knew it's gonna go back eventually. This was just something like I knew, okay. I had like good sources back then about that specific thing that I bought through broker. It was natural gas, okay. But I trusted the thing, and I just threw more money to it because I had it in my bank account. And yeah, I didn't get margin called. Margin called, it means that you either finance it in time or you're just out. You just lose all the money. So yeah, I just threw more money to it, and eventually it returned. And I made pretty big profits back then on that trade. So yeah, that's the only time you should use leverage, when you have the money. Because otherwise you're just gonna risk everything at once. You might win few times because you get lucky, but one time winning is one thing. Because yeah, you win, your money doubles, triples, and quadruples, and but one time you're just gonna lose everything, man. Because you can set up everything and just lose everything. It is that simple. This is the second part, because you shouldn't invest everything in just one thing. You should invest like in percentage of your playing money. Like, let's say you take 10% and invest it. Well, yeah, this is up to you. You can put up 40%. The more you invest, the more you can win, or the more you can lose. Depends on which direction. And it's up to you when you decide if you're out. If you have to be out on, you can't never know up to what value it's gonna go. But before you start investing in anything, you have to do your research. Like you have to be aware of the risks, and there are times when you should invest in commodities, and there are times when you should invest in stocks. Like I think this should be like another topic. Like, if you guys are interested to hear it, then yeah, let me know in the comment section. In this video, I mostly wanted to cover like the emergency funds, and after you have the emergency funds, then you start thinking about having a budget. Or if you already have the money, of course, then you don't have to start thinking about it. But then if you start to think about the investing, then you have the fourth sum of money, and that is only going for investments. And just to add something, like this is a scenario where you can say that to everybody else you should be like you have no money. Like this should be your zero. This is like equal to having like no money. Because what's better, to have actually zero balance, or to have money for 12 months plus expenses for your car, plus gold bars and silver bars, and some investing going on? Or you can live paycheck to paycheck and just not do anything. I would say it's much better to have the second option and to be wise about it. But if you don't want to start investing, then probably just keep like a sum of money in your bank account, some of it in cash, and the rest of it just place it in gold bars. Cause that's the safest. If you just want to store it, then just store it in a safe or something. Like the gold bars should be hidden away somewhere where only you know. On top of this, you should also take in consideration. What's the name? Inflation. Now it depends on which country you are in, but if you are into investments and you're going to read like economic forums or whatever, you should be aware of inflation rate, because your $12,000 for 12 months, it might not be enough 5 years from now. Your spending might increase because the value of the money goes down, and stuff is just gonna cost more. Okay, thanks for watching. Listening.